Ticker symbol DUOL is up around 75% in the past year, and today we'll be looking at an industry leader which has expanding margins. This is a great growth machine as it has solid fundamentals, rising efficiency ratios, and its gross profit rose by around 44% year over year. Today, we'll be looking at Duolingo, an online education company. In their annual report, they describe themselves as the world's most popular way to learn languages and the top grossing educational app. I'm sure you all know about Duolingo, but if you don't, basically they have a super app which helps users learn over 40 languages in a gamified and engaging way, and it allows access through free or through paid subscriptions. What I did not know before actually researching this company is that it also offers courses in subjects like math and music, and it even provides an English proficiency test, which is sometimes used for university acceptance letters or even for professional uses in interviews and job applications. As of December 31st, 2023, Duolingo had around 85 million monthly active users, and around 8% of their users were paid subscribers. But don't worry, because Duolingo is also benefiting from those who are using the free part of their app, as they also have advertisements. Their strategy can be broken down into two different parts. The first one being that they want to boost growth by improving the overall user experience in their application and boost engagement by using the data that they have collected from existing users in the past. So this app has been around for a very long time, and the advantage that they have over other platforms is that they have been able to collect massive amounts of data from around 85 million monthly active users just in the past year. And what they're doing now is leveraging all this data to offer a more compelling value proposition and improve their profitability over time. The second part of their strategy is the launch of new product features that they already have lined up. For example, Super Duolingo, and even the introduction of new courses, such as the ones we have spoken about in music or even math, to attract and retain a different profile of users. The main potential I see from Duolingo is when their courses are officially recognized, as they have been doing with the English proficiency test. If they do this for the different languages, they will believe that by using Duolingo, they can actually become proficient and speak a language after learning for a while. Duolingo has a 9% return on capital employed, which is underneath our 15% threshold, but it has been rising nicely over the past quarters. Now, it has a very nice interest coverage ratio, meaning that it doesn't have to worry about paying back their interest in the short term, has a very good cash conversion of 97%, meaning that it is good at generating free cash flows, and has a very solid profit margin of 73%. Now, their operating margin is sitting at 10%, which is below our threshold of 15%, but it has also been improving in the past. This is where Duolingo gets very interesting, because every single ratio, the revenues, gross profit, and net income have been rising consistently for the past quarters. We can see that the trailing 12-month net income recently became positive in December 2023, and since then the net margin has been expanding at a pretty solid rate. Their growth is such that their gross profit has actually grown by 44% year over year, as we stated at the start. And of course, their efficiency ratios are following a very similar story, where all of these ratios have entered positive territory and have been rising for the past quarters. And one of the best things that this company has is that they basically have no liabilities. As we can see, their current ratio is above 3 times, meaning that they have more than 3 times the total assets to compensate for their total liabilities. When we look into their fundamental analysis, this company gets a solid 6 out of 8 ticks, as first of all, they have very low liability risk. They have a very solid balance sheet, as they're able to pay back all their short-term liabilities just by using their current assets, and then they have very, very consistent cash flows. The great thing about their cash flows is that they're actually growing organically, and this is being funneled by their organic revenue growth. What we mean by organic, as always, is that they do not need to rely on acquisitions or mergers in order to grow their top line. Now, I believe that this company has a very big existing moat or competitive advantage, mainly because of their brand and their history. This company has been around for a very long time, and it is without a doubt the leader of online language learning applications. I have used it in the past, I know a lot of people who have used it in the past, and if you're consistent and you stay with the app for a very long time, you can actually get surprisingly good at the language. The main competitive advantage it has is that it has created a very loyal user base, and it has a very good brand perception worldwide. Their marketing has been exceptional. I'm sure you've seen their TikToks or Instagrams or other type of ad creatives. And as a consequence, I believe that when someone is looking for an application in order to learn a language from the comfort of their houses and in an independent manner, they will without a doubt go for Duolingo rather than for any of their existing competitors, just by asking around to their friend group or to their peers, they will for sure be recommended to Duolingo. Now, the two things that I didn't like from this company are, first of all, that they're not actually paying a dividend, and in the past years, their shares outstanding have actually been increasing, which is the contrary of actually conducting share buyback programs. It looks like they're actually issuing shares. Although this is not a very significant amount of shares, it's still diluting shareholders, which is not something that I like to see in companies. And the second thing that I didn't like is the fact that I don't believe that they have very solid pricing power. As we saw at the start, only around 8% of their users are in their paid subscription program. And although they can increase this program without a doubt because no other competitor is going to be offering the same value as they have, I believe that it will be very tough for them to actually increase this percentage of people who will be using their paid subscription plan. I do believe that in the long term, if they start adding other subjects and if they start offering a lot more value by making it, for example, tailored to each individual student, or even better, if they start getting official convalidations for these language courses, this is what I believe will actually start to drive growth and pricing power for Duolingo. Now, when we look at their valuation analysis, we can see that it is trading at a very high price to earnings ratio. And this is because it is growing at a very fast pace and because it recently became profitable, so their net earnings aren't too high yet. Additionally, they currently have a 1.73% free cash flow yield, which is way below the 3% long-term inflation rate. Both these ratios suggesting that this company may be overvalued at current prices. And now when we look at the risks and possible challenges, the main one that I do see is the performance, and this is mainly due to the fact that I believe it's a lot tougher than they think to convert all of these freemium users into paid users. As I have stated before, all of these risks will be ignored if they manage to get official convalidations and get some sort of official certification for their language programs. But until then, I do believe that this has some sort of risk with the way their services are actually viewed, and due to the fact that the online educational landscape is actually becoming more and more competitive, because there are a lot of new entrants which are actually offering a more professionalized language learning experience, which may defy Duolingo. Now, before we move on, please remember that I'm not a financial advisor and this is not financial advice, so please do your own due diligence. However, I do believe that this company has a very strong competitive advantage. It has consistent cash flows which are predictable, but it does not have high return on capital employed yet. So I do believe that this is a good company and that it probably will be a good investment, but right now I think it's trading at a very high valuation. So thank you for watching. As always, this has been the Cashflow Compounder. Join the free Patreon for extra content, and there is a link in bio for a free stock if you join Trade Republic.